Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lien.
Boris Schlossberg.
Hello. Good morning, everyone. This is Kathy. If you can hear my voice, see me and everything's coming through properly, say good morning. I'm going to move this panel down so that I can see your comments. But yes, good morning, everyone. I'm so glad you guys are making money. It sounds like you guys are rocking and rolling. Volatility is good if you know how to manage it. And, you know, a lot of people are saying that they are taking advantage of the volatility in the markets. I know that we did last week at BK Traders. We made 100 pips in our day trade. I think I actually forgot, but I think it was almost 300 pips total. No, it was almost 200 pips total. But still, we did a fantastic job with our day trades, swing trades, and just plowing forward because volatility is good for the markets and good for our trades. So I would like to welcome all of you. There is a lot to talk about. There's a lot to talk about in regards to trading, price action, and news. So to begin, I'd like to start by sharing my screen. So give me 1 second to do that. And actually, before I share my screen, I like to talk about how the process that I have when we look at trading and we look at the markets, because this is the process that we kind of follow every single day and every single week. And what's really great about Mondays is that it really gives us the opportunity to look ahead, to plan for the week, to talk about, the events and, what could happen in terms of our biases. So, we get to learn, prepare, and plan for the trade of the week. How many of you joined me for live trading non-farm payrolls on Friday? If you did, give me a thumbs up or a yes. If you didn't, just say no. That is fine too. Let me know if you joined me for NFP live trading on Friday. Just give me 1 second while I pull up my zip checklist while you're doing that. All right. Where did my zip checklist go? Let's see. Okay, if you joined me for live trading, so some of you did, some of you didn't. And, we did really well on live trading NFPs on Friday. It was another great session. But what I really want to talk about in regards to that is how we learned about what was going to happen. We prepared, we planned, and we executed our trade. So we did that on a micro level with news trading. But today we're going to do it on a kind of a bigger level with the week ahead. But the process really remains the same, which is, let me know if you can see. Okay, I'm going to share my screen 1 second. So I'm going to add to stage. I'm going to share my screen. I know you can see my heat map right now, but I actually wanted to share my computer screen. So give me 1 second. I'm going to share with you my computer screen. Wonderful. So you should see my zip checklist. And this is really just my checklist for trading every single day. So every single day, regardless of whether it is a Monday, Tuesday, Wednesday, we're doing week ahead or a day ahead, we always look at what happened overnight. What was the data? What was any big news events that we had overnight? Then we look how our stock's performing this morning. Then we look at how our bond yield's doing and how's the US dollar doing. And only after that, only after we've kind of digested what the sentiment in the markets is, do we actually look for our trading setups. And that's exactly what we did on Friday when we traded NFPs. We looked at what the market sentiment was. We looked at what was the weakest currencies, what was the strongest currencies, and we came up with our trading plan based upon respecting the sentiment in the market. And this is very important today too, because there's some very interesting price action that I want to talk about. Now, in terms of economic data, last night, this morning, the data isn't as important as the kind of the news that happened. You may or may not know that circuit breakers were triggered in Asia overnight. Now, if you don't know what circuit breakers are, give me a question mark. So I'll explain it. If you do know, then I'm just going to go ahead and move forward. But if you don't know what circuit breakers are, just let me know. Just give me question marks. Otherwise, if you're good, give me a thumbs up, and we'll just move forward. And even if there's one of you that doesn't understand, I think all of us will benefit from understanding what a circuit breaker is. A circuit breaker, and I'm going to move to my charts right now, and we're going to pull up the Nikkei, which is right here. Okay, so a circuit breaker is when you have kind of the maximum level the exchange will allow stocks to fall before they halt trading, before they stop trading. So last night, when the Japanese futures opened, we closed on Friday at 32,000. And then we had a drop of basically, a 10% drop down below 30,500. So this happened in the Japanese markets. This happened in Taiwan markets. And so these were the largest one-day drops that we had seen in a very long time. For Taiwan specifically, this was the largest one-day drop ever on record. And so circuit breakers were hit. And the drop, if you were looking at this, was caused at a buy. And this is very important. I want you guys to pay attention. By the gap. I'm going to remove my indicators. It was caused by the gap open on Sunday. And it triggered a huge sell-off in the Japanese markets. And so circuit breakers were hit in the Japanese markets. Now, if you look at ES futures, you will also see, this is S&P futures, that there was a gap lower. Now, of course, it was not a circuit breaking gap because it wasn't 500 points, for example. But we did have a gap lower, and we also had a gap lower. Oops, I didn't want to add text in the Dow. Now, why am I showing you all of these gap lowers? Because first off, we are when we start trading. Sorry, this is the not the continuous contract. This is the continuous contract. When we start trading, we always look at the news, and so then we had a circuit breaker triggered. That was probably the biggest news overnight, because when the circuit breakers trigger, it usually means, first of all, it means that we're in a bear market in those markets. But when we have circuit breakers trigger and we have gaps, on Sunday, what do you know about gaps? Take a wild guess. Someone tell me what is commonly told to us about gaps. I know someone in the room has to have an answer. Yes, it's always so smart. Gaps, Denise, another mutant, Bob Kennedy, gaps always fill. So we always panic when we see a gap, right? And usually in the first hour trading, it's treacherous. Many investors panic when there's a gap, but this hasn't quite filled yet. But, first off, in currencies, this gap was filled, right? The dollar-yen gap was filled. So if you start trading on Sunday morning or Sunday evening, whatever it is, your time zone, you may see the gap and you may see the huge drop and say, oh no, it's, more extensive selling. Let me go in and sell even more. But that's the worst thing to do. One of the most important things to understand about trading, and this is what I really want you guys to take away from this, is that gaps always, not 100% of the time, but like 90% of the time get filled. And so gaps always get filled. If you remember that, then, it's either one of two things. One, you don't get fooled into selling and losing money, or you can maybe actually make money by buying the bottom. And we had that also. If we go back to our Nikkei chart here, if we type in Nikkei, and I'm going to get into why I'm talking about this in a second. So the Nikkei gaps are almost filled, and we also see that in Dow futures, ES futures, not quite there, but, pretty much close to being filled. So why am I talking about this? Of course, it's important because, we had a big sell-off in the markets. But I'm also talking about this because when I looked at the screens on Sunday night, Dow futures were down, I think, I don't remember, down 2,000 points or something like that. And, ES, NASDAQ, they were down a lot more. Now, 940 points, I mean, it's still pretty bad, right? But 940 points doesn't seem as bad as what it was at the Sunday open. So why am I talking about all this? I am talking about all this because, yes, there's a risk-off sentiment in the markets. But sometimes when we have these huge gaps down and then we have the filling of the gaps, sometimes it may be the first signs of capitulation, which means the first signs of a potential bottom. Now, anything can go. I don't want to call a bottom here in stocks. Let me pull the NASDAQ ES back up. I don't want to call a bottom in stocks. Let's see. But when we have this capitulation like this, especially if this gap is fully filled up, then maybe we could have a rebound. Now, what kind of bottom will we get? It could be a shallow one. It could be only up to here, which is not much, with up to this left shoulder over here. But usually when we have these gaps, this could be a sign of capitulation. And no coincidence that this sign of capitulation is happening right at the 61.8% fib retracement of the November to January rally. So, I'm not going to be so bold as to call a bottom in stocks, but these are the signs that we look for in terms of a possible rebound, recovery. So we talk about sentiment. We talk about how we're in risk-off mode, and we clearly have to be careful that we are in risk-off mode. But there could also be a little bit of a recovery. Now, fundamentally, what could drive a recovery, right? We have more than 50 nations already contacting the Trump administration for negotiations on these higher tariffs. So the date that these higher tariffs are expected to be announced is April 9th. So more than 50 countries have already contacted the Trump administration for higher tariffs. Maybe we could get some sort of reprieve on April 9th, which is on Wednesday. And maybe that could lead to a little bit of a relief rally. There is no escaping a couple of things that have certainly changed, which is fear and uncertainty amongst investors and businesses. Even if the tariffs are reduced, repealed, businesses have been shell-shocked. So they've been shell-shocked. They're going to be much more conservative. They can see how volatile the decisions are from the Trump administration. And so they're going to be very conservative about business investment. A lot of companies have delayed their IPOs, delayed big capital spending. And I think that this is going to be the norm going forward. And it's going to be some time before trust is restored in the economy, in the markets, and in the growth outlook. Now, secondly, a lot of international countries, nations have been turned off by U.S. investments, because of what's the uncertainty in the economy, because of the administration, because of their political biases. They've been turned off, and because of the tariffs, by U.S. investments into U.S. stocks. Now, of course, Trump is doing all this to encourage investment into building in America, and that could be a separate silo. But in terms of investing into U.S. stocks and the market itself from actual equity investment, not in, hard building and manufacturing investment, they've been turned off. And so getting that trust back into the markets will also be difficult. So at the end of the day, we may have a relief rally, but something significant has changed in the markets. And so we may, we're not going to see that 6,000 again in the S&P anytime soon. So yes, we could get a relief rally, and that relief rally could be driven by some sort of reprieve in tariffs, which I don't know. Once again, I've given up on predicting Trump. I don't know if it's going to happen this week, but if we do, it could still be a shallow rally. But shallow is still, could be significant on a percentage basis, but it's not. We're not going to get back to 6,000 in Dow, S&P. We're not going to get back to 5,000, 700, 800 anytime soon in the S&P. So that's what, that is the kind of the sentiment measure that I think we all should be aware of. And the most important thing is that we are risk off today, but we're not that risk off is what I'm trying to get at, because we were a lot worse at the New York Open. And as you look at my right-hand corner, Dow futures continue to rebound. So Dow futures are continuing to rebound, which means that we could have a relief rally. So when we take a look at sentiment, it's important to take a look at, what is going on. So it wasn't so much economic data last night. It was much more so the stock performance last night and the stock performance now, because stocks are off their lows. So do not be fooled by the absolute amount of drop in stocks, because they were much worse last night. So we could be seeing a little bit of a relief rally. What are US yields doing? We're already seeing that. US yields already up 1.23%. They were down at the market open. They're now rebounding. So treasury yields are rebounding. This is not a reflection of the market suddenly, being optimistic on the US economy. The reason why bond yields fell so much was because of recession fears. The recession fears have not gone away. I think that this is more a reflection of, also potential capitulation, and also that the Fed will be cutting interest rates later than some of the other central banks like ECB and maybe even RBNZ this week. So this is a sign that we could have maybe a little bit more of a relief rally in dollar yen. So after we've digested what's happening in stocks, watching what happens in treasuries, do we start to look at what's happening in the dollar? And so that is why we're not seeing, dollar yen did drop quite a bit at the Asia Open. It was down quite a bit, all the way down to 144.82. Now we're almost 200 pips off the low. And, if US yields continue to recover, we could have a bit more of a rally up to 148 in, maybe not 148, but definitely up to 147. This high here, maybe 147.30, 40, if US yields continue to rebound and remain in positive territory. So the point that I want to make, the main takeaway, is that there's really, really minor signs of a relief rally this week, possibly. It could go wrong in any way, but stock market, the bond market, the currency market are all kind of flashing the same signals. And then we also have the possibility of people being hopeful for some sort of negotiation on the tariffs. So I hope that makes sense to you. That's one of the most important things that I want to share with you. So that's kind of the process of elimination that I do. I look at, what are stocks doing? What are bonds doing? What are the rest of the markets doing before I actually start to look for my currency trades? And then after that, will I look at, for my zip setups? So then I'll turn to my zip setups and look, dollar yen is above the indicator line. So short-term trend is bullish. The background has not turned green yet, so no trade yet, but euro dollar. And same story, we're starting to get a move in those general directions that could be signaling something. Now, I do need to watch them more closely to see if we get an actual turn, but, if the euro background turns red, there could be a more technical confirmation that we would have a more significant dollar recovery that would be consistent with what we're getting in sentiment. And for those of you that are not familiar with ZIP, make sure you join our free community, because Boris can pop in the link into the free community, because I've got a lot of it's community.bktraders.com. I've got videos under the learning section on the FOREX starter course on how to use ZIP. So it's really great there. All right, so now let's talk about how do we plan, prepare, trade this week. The most important thing about plan, prepare to trade is that we already set the tone, possibly a potential for a relief rally. And that's why I started talking about this. You can let me know if you agree, disagree. I'd love to hear that. And please type in as I'm talking, because I want to address that. But we are already seeing, if we go to Dow futures, look at this, as I'm talking, more of a relief rally. So I hope you're understanding why we're getting that relief rally, because, first of all, gaps always get filled, but we are also getting the confirmation in the other markets. So this could be more of what we get this week. Now, in terms of data, there's quite a bit of data, but once again, we all know that it's going to take a back seat to what's happening in the headlines. And so we'll have to watch headlines. We'll have to watch the data. The most important, there's two things for the U.S. this week. Number one is going to be for the dollar. Let's look at the dollar first, okay? Let's see if we can filter out just the dollar. So for the dollar first, the most important thing is going to be the Fed minutes and the inflation report. Now, on Friday, we had the stronger jobs report. So that helped. It kind of helped. It didn't help, right? Because it helped to prevent deeper losses on Friday, but then we had very steep losses on Sunday evening. And while you could make an excuse saying the relief, the recovery off the lows today is because of the NFPs, it's really not. I mean, if it was the case, we wouldn't have that capitulation on Sunday. I think investors are looking past the recovery in jobs that month and looking for job losses next month. But anyway, it's not what we're looking at this week. This week, Monday, Tuesday, Wednesday, not really much going on. Wednesday with the Fed minutes. So in terms of Fed minutes, people will want to be listening to whether or not, when we heard from Powell after the NFP report, he basically suggested that they're not going to pull the trigger on interest rate cuts at the next meeting. So people are looking at the Fed minutes to see whether the outlook agrees with that, or whether the outlook is bearish and maybe the Fed is playing chicken with Trump and seeing who's going to blink first. Is he going to blink first by at the market meltdown, or is the Fed going to blink first? The FOMC minutes should reveal some of that. Inflation is normally very important, but I mean, we know that maybe prices would be a little lower, but it's probably going to be higher because gas prices increased. And then also, a lot of businesses were raising prices in anticipation of tariffs.
Well, I'm just going to pop in here because I think the CPI is going to be really, really important on this cycle, especially if it gets hot. If we have a hot CPI, it is the worst of both worlds. Kathy's talking about the fact that yields are going back up after being a flight to safety. One of the reasons they're going back up is there is, I think, fear of an inflation premium inside bonds. If you get a situation where equities are falling and bond yields are rising, it is the absolute most vicious of cycles. It's the worst kind of a macro environment. I just posted this on Twitter, and like everybody started to retweet this tweet, even though it's it seemed pretty obvious to me because I guess I've lived through the 70s, so it's pretty obvious to me what that means. But if we put ourselves into that situation, it's very, very hard to dig ourselves out. I think that's why you need to watch the CPI very carefully. I'm going to try and trade that live with you guys this Thursday. So beware. It's going to be an event. Of all the
So Boris says that he's going to trade live with you guys on Thursday. Make sure you join the community because, so that you are alerted of it. We're going to be adding it to the events. We're giving you the link to live trading. So Boris, we popped up the link for the community. Yes.
We're good. I'm going to put it again. I'm just going to put it again for you guys. Make sure everybody who's watching us who is not member of the BK community right now, go put it up there. As a matter of fact, I'm going to put it on Twitter as well, because if you guys are watching us on Twitter, I put it up on YouTube, but I'm going to put it on my Twitter. So go out there, just hit that link. You become a member of our community for free and access to everything, all of our courses that are free courses over there, as well as all the events that are coming up, as well as all the commentary. So really, really worth your time. It's totally free. Community is there, and it's on mobile as well. So you'll really enjoy it. I just put
it. So let me carry forward. So inflation data, is Boris thinks it's going to be very market moving. I think it's important, but I think it's, this is the day after the tariffs take what ends up happening with the higher tariffs. So we'll have to see. But the inflation data and the FOMC minutes and the PPI usually is far less important than the CPI because we already know what CPI is. And then the consumer sentiment. But of course, consumer sentiment is going to crater. That's not going to be a surprise. It's going to be FOMC minutes and CPI. That is the most important. So what about the dollar? We just talked about that, right? I know you guys have a lot of questions about about NASDAQ, about Dow. Really, we talked about the stocks. It's all my view on ES is my same view on all the other instruments, which is that if we get a little bit, which is exactly what one of you guys said, Park, which is there should be a rebound, but it should be short and probably short-lived. But this is going to be the same effect mirrored in the NASDAQ as well as the Dow. But looking at the dollar index, and just dollar yen, and let me just remove all this stuff in general, it's the same story. We got a little bit, gaps will probably be filled. We'll probably see it up here. I'll probably consolidate, I think. And then we'll have to see what the tariff announcements, inflation report comes out as. But the dollar, that's a CPI report will probably guide a lot of things along with any kind of risk appetite we're getting in the markets. Next up is the euro. Euro is, so euro did not really have a gap, a little bit of a gap. The gap was filled really easily here. And euro is up on the day. But, we did have some weaker data from the Eurozone this morning. So with the Eurozone, if we filter this to Europe, we had weaker German industrial production, very weak numbers. Weaker German trade, although better than expected. And then weaker Eurozone retail sales. ECB is almost certainly expected to be cutting interest rates before the Federal Reserve. Now, the EU is trying to provide fiscal stimulus, which kind of explains this burst in activity here and enthusiasm, because they're thinking that maybe the fiscal stimulus could make up for some of the pain for businesses, whereas the U.S. right now hasn't announced fiscal stimulus yet. But so my point is, this type of pattern suggests to me this is not the fact that if it ends here, this is not a positive pattern. If it ends right here, which is below Friday's close, I think it's bearish for euro dollar. So right now, I'm more bearish euro dollars than anything else. Later on in the week, it's not going to be about the U.S. There's nothing on the it's not going to be about the EU or the euro. There's nothing on the Eurozone calendar that's going to matter. It's all about the U.S. data. Now, we do also have the RBNZ rate decision. I'm going to skip the other currencies to talk about RBNZ because we do have an RBNZ rate decision. Market is looking at a 25 basis point rate cut from the RBNZ. This is a change. Previously, they were not looking for a 25 basis point rate cut last week. They were looking for no changes. So they were looking at no changes from the RBNZ. But because of the market meltdown, they feel like the RBNZ is going to step up. Now, I like to compile, as you may or may not know, these tables that show how an economy changed from one central bank meeting to another. If you look at this, I'm going to say there's probably just as much green as there's red. So without the market meltdown, the RBNZ should be keeping interest rates unchanged. And so that's why it's still, I think, a tough call. It's not a given. It's like only about a 65% chance that they're going to cut interest rates. So it's not a given because the economy, unfortunately, a lot of this data is from Q4. It's late. It's not really reflecting what's happening right now. So from a data perspective, they don't need to cut interest rates immediately. However, from the perspective of what's happening in the markets, the global growth outlook, maybe they want to shore up their own economy and prevent any sort of deeper market meltdown and recession in their economy by cutting interest rates now. So RBNZ is going to be very, very important because the market, that's tomorrow night, because the market is not certain what they're going to do. But even if they leave interest rates unchanged, I think we're probably all pretty confident that they're going to be dovish, signaling that a rate cut could be coming. But this is going to be a big decision because the market is not clear on what could happen. Now, looking at Kiwi itself, Kiwi's had a huge meltdown. Kiwi and Aussie were hit very, very hard because China retaliated very, very significantly to the tariffs. And so trade war is on. Those countries being due to the proximity and their trade relationship with China and their sensitivity to global growth were hurt the hardest. So Kiwi definitely deep in, bear mode. If we look at our moving averages, we're below all of the major moving averages. These are very significantly weak levels for Kiwi. I don't even need to draw a fib to tell you that, that the support below is very far. But look at this. If we close like this, it looks like this, right, my friends? Does it look like that? If we close like this, it looks like this. So maybe we would get 3, 4, 5 candles somewhere in this region here. All right. least to me, this candle looks like this candle, which is a reversal pattern. So we'll have to see whether or not that plays out. UK. Sterling. Sterling is actually one of the weakest currencies today. We have GDP this week, which is expected to be stronger. We have some minor data, some comments from MPC. BOE is expected to cut interest rates at their next meeting. Sterling is, it's down 0.6% when the euro is actually turned positive. So this is actually one of the weakest currencies. And, for those of you that like to look at charts, it's very clear. We have a break below this trend line. We have break below this trend line, which suggests, and it stopped right at the 200 SMA, but I think that maybe we'll have a rebound there. But if we have a rejection at that level, it'll probably touch the 50 SMA around 127.50. This break below, if it holds, is quite bearish for pound dollar. So this is something different that's happening in pound that's not necessarily happening to other currencies, because I think the expectations have changed for UK rate changes. Now, next up is the Canadian dollar. We're going to look at Canadian dollar and Aussie together. So for Canada, we have just the IVPMI. Remember, on Friday, we had very, very weak CAD jobs data. We sold CAD, against everything on Friday for NFP live trading, made some really good profits. Right now, CAD is flat. CAD, this is the move after the horrendous CAD jobs report. It continued its move a little bit, but now it's meeting up on some resistance. We do have IBPMI on what later this week. Is probably not going to be good. I am still bearish Canadian dollars, but we have to get above all of these moving average resistance to really turn it positive. So we'll have to see. But I'm still bearish, although it seems like it's plateauing a little bit. We also have to see what the negotiations are. Maybe, it seems like Mark Carney's got away with Trump. So if somehow, in the negotiations, he's able to negotiate something better, although Canada, was not hit with reciprocal tariffs, so they don't have to worry as much. And maybe they're not as urgent to be involved in these negotiations as some of the other countries. There could be some upside for Canada. But right now, investors are bracing for a recession in Canada. So I still am bearish Canadian dollars. As for the Australian dollar, we've got job ads coming up. They're supposed to be better. Consumer confidence, not expected to be good. Business confidence, not expected to be good. Later on, we also have Australian and Chinese inflation data. Chinese inflation data is expected to pick up. Australian inflation data probably a little hotter as well. What's interesting is that China has begun to devalue the yuan. China has begun to devalue the yuan. For some time, they were resistant to it. We maybe if you joined me before, we've been talking for a few weeks about whether or not they're going to weaken the currency in order to offset the pain of the tariffs. They were resistant to it. Maybe they were waiting for this last final, I don't even know it's final, but this latest tariff announcement from the US. We got the latest tariff announcement, obviously very harsh. They hit back really hard, and this is a pretty significant devaluation of the yuan. So they could be like in 2018, the first Trump term, weakening the currency in order to ease the pain for their businesses and for anyone who wants to import from China. Now, Trump has said any currency devaluation is going to be responded with even more tariffs, but I don't know. We'll see. I have no idea what's going to happen. But right now, China is certainly using its currency as a way to offset the pain for its country. So the last things are really just the Swiss franc and the Japanese yen. Japan reported very strong average hourly earnings. We've got a lot of data from Japan this week. They're in negotiations with the US in regards to the tariffs. The main thing with Japan, though, is that rate hike expectations have disappeared. The market no longer expects a rate hike from the Bank of Japan. So that is another reason why we could get a little bit of a further relief rally in dollar yen. So we've got a lot of things happening that could lead to a little bit of a relief rally in the dollar. And that little may not be so little, right? Because it's just little in terms of the context of how much we've fallen. But it may not be so little on a percentage basis. It could be very big in terms of opportunity. So that's what we're going to be looking for. BK traders, we'll be trading every day except for Wednesday when we have Tuesday night, Wednesday we have U.S. inflation. We'll be looking for post CPI live trading opportunities, but this will be a week where we will be watching headlines, but hopefully we get some good trading opportunities out of it. All right. Any other questions that you want to ask me before I turn to Boris, who will get into stocks as well as gold with you, and then kick off with some live trading? All right.
Hi, guys. Just trying to get my lighting so we're not ghosting too much. Good morning, everybody. Are we rock and rolling? Man, what a night. 2, not 1, 2 accounts funded overnight, guys. I'm going to show you exactly how I did it. Finally, my Moby Dick, the $150,000 account funded off this volatility. Going to be so much fun. All right. Good morning. Good morning. Good morning. Thank you, Kay, for taking us to the open. Let me share my screen. Bear me a second here. I think we're going to go here, share. Good morning. Good morning. Good morning. Actually, you know what? I'm going to go to a different cut so we can have a bigger, bigger views for everybody. I'm going to hang on a second. Let me see if I go this way. Which one do I want to choose? I think this one. Yeah, this is the one I want. Okay, cool. I always forget. Good morning. Good morning. Good morning, everybody. How's everybody doing? How's your trading? Thumbs up. Let's do poll of the day today. First poll of the day. How did the trading go? Let's see. Crash Monday. Monday trading. Your choices are killed it or it killed me. And actually, I'll give you another option. Both. Let's see how you guys did. Good morning. Good morning. Good morning. Yeah, great Saturday night. Everybody's saying everybody had a great. We love volatility, right? This is what we live on, right? We live off volatility, and Friday night, Monday night was really, really great. However, we got like 7 minutes to the open. I want to share with you the absolute latest stuff that's happened in BK in terms of production, in terms of indicators, in terms of tools to help you trade and make money. So I'm going to put up the link again here for join, because if you want to understand exactly why everybody in the room is making money, it's primarily because of this indicator that I created called the BK BFF scalper, right? But here is the thing that's going to blow your mind. So first of all, there's no scalping, right? I think you guys saw my tweet last night, that when we get into these crazy markets where you're going to get 100-point movement per minute, it's idiotic to even think you're going to be able to scalp for a couple of points. So there's no scalping. There probably won't be any scalping this whole week, because we are anytime we're in 1% or greater than daily market movement territory, and especially if we're above 2% market movement territory, scalping is generally not going to be productive because you're going to have too much volatility, right? It's kind of a good rule of thumb. Remember, 90% of the days are going to be 1% or under, but we are now in extraordinary territory, in which case trading turns, trading much larger swing trades is absolutely much more productive. Now, the second thing that I said to everybody on Twitter, and this is really, really important, if you're trading prop, you go from mini to micro. So you literally trade one micro S&P, one micro NASDAQ. You can go up to 2. That is your absolute limit on any account less than $150,000 or less. If you're trading a $50,000 account, you're trading with a large contract, you're a fucking idiot, okay? You will get lucky. You may press the button and it's just going to run and you're going to get funded. But you're probably going to burn 3 or 4 accounts trying to do that, which is okay. Like, you want to do that. I'm all for, let it burn, have a hunch, bet a bunch, trade, just get funded that way. But of course, you're never going to be able to, get paid out that way. So, while it's fun to get funded, you really want to have the skills to get paid out. So if you want to get paid out, your only choice is micros. And as a matter of fact, you can see me. Remember, this is the account that I said there was the red-haired stepchild. I was having a hard time with this. It was like at 50,500. I did $500 on micros this morning. I'm going to show you exactly how I did it off of the new function within the scalper called the turn function, which I introduced just the other day to everybody. But over the weekend, because yes, I'm that kind of an obsessive person, I literally spent the whole weekend coding just for you. And let me show you what I did. So first of all, let's explain the turn indicator. Turn indicator basically looks at extreme, big momentum moves. Every single green dot is a momentum move. And if we get 3 or more momentum moves, which are then reversed by a red momentum move, that's our turn signal. Right? Same thing. If we get more than 1, 2, 3 red momentum moves, and then we get a green momentum move, that's our turn signal. So when you get a strong trend, you're going to get like 10, 11 red moves. And we have a table that keeps score of how many momentum moves there are. Little dots, right? So it's just basically shifts of momentum, creates the turn signal, right? Now, here's the cool part. I realized that, especially since the turn signal is basically a wave around the 8-period SMA function, right? It's just basically, completely up and down, price wave action, right? Waves crest. And if you think about this, like if you look at this 8-period SMA, the crest usually is some point above the 8 SMA on the short side. That is the highest point over here, and then it starts to turn, and we get the crest function. So the intelligent thing to do is to place your stop above that crest, at the highest, the swing high or swing low, right? And then see if we can ride the wave the other way. That's basically the turn function. Now, you guys know, and by the way, I go through this in a 10-minute video. If you want to see the full explanation of how the mathematics and all of it goes, it's all free in my day trading course, which is free in our BK room. I just put up the link again. Get your asses in the BK room, join us, watch my 25 video day trading course. The first video on BK Scalper is the explanation of the mathematics of this. But as you guys know, my favorite mathematical money management strategy for swing-like structures is I enter at price. I take profit at half unit of risk. Let's imagine my unit of risk is 2 units, right? So I'm entered with 2 units, and it's 1 point of risk, just to make it simple, or $100 of risk, or 10 points of S&P, whatever the fuck it is. It's just for our purposes, just equal amount of risk. So now I got 20 points of risk because I have 2 units. I give up the first profit at plus 5 points at half risk, right? At half risk. Now I'm only carrying 1 unit of risk. I'm already profitable for half, but I do not, very important, do not move my stop to break even, because I need to let the trade float so that I can get paid. Otherwise, you're just going to truncate your profits. You have to give up losses in order to truncate the profits. So the mathematics of this, trust me on this, goes like this. And then the second longer term profit is going to be 1.5 times risk. 1.5 times risk. So if I get half risk, 1.5 times risk, it's 2 units of profit that I win. If I get blown out completely on 2 units, -1, I'm -2. So I'm -2 to the negative, +2 to the positive, right? Which would not be a great payout ratio if this was even money, but it isn't, because here's what happens. When you're using that short target and you're basically doing half risk on the short target, fully 25% of your trade gets amortized at those short exits, which are only half risk, right? So if you kind of put yourself in a situation where 25% of your numbers are half risk, 25% are -2, and 50% are +2, you are net positive expectancy like you wouldn't believe it. And I'll prove it to you because I traded it like this all night long, and that's how the P&Ls came in. But that's basically the structure of mathematics. But then I went one step further, and I was like, you know what? All of this is very complicated to try to figure out on the fly. Why don't we just have the algo figure this out for us? And I can just simply guide you to, if I go into detailed version. Oh, wait, shit. Did I go in the wrong one? Sorry, I'm in the wrong one. Oh, there it is. Sorry, it just took a second. If I go into detailed version, it will spit out everything for you at the moment of trade. So it will tell you, hey, you're going to enter here. Your suggested stop is here. Your suggested first target is here. Your suggested second target is here. If this is your total risk. So you don't have to do anything, but just simply go sell 2, and then adjust your stops, adjust your targets, and let the whole thing play itself out. And it's literally what I did all day long, all night long on the trades. So markets actually we started trading. I don't see much price action. So since I don't have any signals on the turn side, let me show you how that played out on my other account. So I'm going to go, first of all, you know what? Actually, bear with me. I think I can, let me show you all the trades I did. Here's execution labels. Oh, sorry. It's on the, I need to be on the MNQ. I was like, where are the labels? Okay, here come the labels. You see me, selling multiples and buying, multiples. Let's just take it. It takes its time here coming in. As usual, market open. It's going to take a few seconds for us to for the charts to paint. Come on, baby. Oh my God, it's taking forever. Okay. And let's go to MES over here. Okay, you can actually see it on this one because here it painted. You see you see me selling 1s and 2s and buying them back. You see me over here. I did not buy. But here you see me taking the red label, selling both over here, buying the 2 of them over here, doing the same thing over here. I missed the buys because way for these particular ones, but this 1-2 short exit, long exit, short exit, long exit, half to 1.5 +2 really builds up. And the same thing on the here's the NAS. I don't know why this is having a hard time coming in, but really productive. Where it was super productive is I literally got funded. Let me just log out of here, go into my other account. Nothing is going on right now, so there's no, we're not going to do any trades for now. Let me just go in the other account. Let me show this to you. Go to my personal account. Okay, so the 66. You see this one? I finally hit the 159. I finally crossed the Rubicon. Now this one, the 150s, I was trading with a large account. I don't know what the fuck is going on with TradingView. It's taking its time. Finally. Okay, so let's go over here. Settings. Oh, this show execution labels. Okay, cancel. I think this was the thing. I was trading. This is very important. I was made all my money in this account on the S&P because it was much easier to trade the S&P this way. Oh, come on, baby. Show me the prints. Okay, here's the S&P, and you can see me. You can literally see me mirroring all the the labels here from the buy side to the sell side, right? Early in the morning, and I think actually I got done very fast. I got done like over here on these labels. Did I trade these last night? Trying to remember. Yeah, and I traded them. I traded them obviously Asia session here to the downside, to the upside, to the downside, to the upside. You can literally see me now. Not every one of them is getting TP'd. Some of them, of course, you're getting you're going to get stopped out. But then that's the whole point. Is if you're half -2 +2 at 25, 25, 50, you are net positive, very, very fast expectancy. You're literally building $2,000, $3,000 per every 3 or 4 trades you're trading on the big accounts. And that's how easy it was to go from zero. That account was started last night, 150 to 159 in a very, very productive way that never even came close to breaching my limits. All right. So I just wanted to show this to you, share with you how the structure worked. I absolutely love it. I hope you guys really, really like it as well. It's obviously a much easier way of, it's right now, it's just impossible. What happened here? I'm in the wrong one. Sorry. I'm going to log out. Now I got to go to the other account. Okay. All right. We're going to go back to our other account. And then just to show you guys, hang on a second. Let me just make sure that we're not getting any signals. No signals. We're deep into the sell-off. Market is, it gave a buy right on the open, which I would have never taken because it's an open buy. So that would have been a false buy, which is fine. And now we're watching for next possible turn signal in the marketplace. And if it comes in, we'll play around with it. But in the meantime, what I was going to say to you is, those of you who may be interested in wealth charts, right? We actually, as I said to you, we're going to be doing the wealth charts webinar this Wednesday. We are one of the first ones to have to have our indicators on wealth charts. So Scalper now is on wealth charts. I want to show you this. Check this out. This is wealth charts. And I'm going to trade with wealth charts with you guys probably starting tomorrow because I really like them. In wealth charts, I can actually place the trade and the chart on the same thing. So this is, scalper. This particular scalper does not have the turn mode in it yet, and it'll take, it'll be a couple of weeks because it takes a while to integrate all this stuff in. But it has all the other functionality, and you can certainly use it to do all the trades as I did. Here's what I wanted to show you. I started the account on Friday. This one is funded already. I started this account, and I'm like, $700 away from being funded. And this one I actually scalped. Is super fast to scalp on wealth charts. It's impossible, obviously, to do it now. But great platform, really, really easy to use. The thing I really love about it is the charting and the trading is in the one single panel. So you could trade off of one panel, and you could actually trade multiple accounts. Like I could trade one account here, gold over here. It'll be a lot easier for us to kind of follow trades as we go along. So that's something that's coming. But I wanted to just show you that success has been very, very universal because the indicators are great. That's it. Any questions from you guys? Anything on your mind? Let's see how the poll is going. So the poll is telling me 40% of you killed it, 22% got killed, and then 38% were both. Okay, that's fair. That's fair. I totally understand it. I also got killed. I lost a couple of accounts. I mean, you couldn't have traded last night if you didn't lose a couple of accounts. But this is the perfect reason for why you trade prop. Because what is better to lose a couple of $40 accounts and then run prop and run funded, or to lose a couple of $5,000 accounts or $10,000 accounts in your own personal account. That would have been your choices. You don't get to win everything. In trading, there's always a trade-off, and just the idea of like burning so much of your own money last night would have been very, very painful, I think, for most of you guys. Brian says he blew an account. Was that your own account, or was that a prop account? No, Brian. Sorry, Riven. Sorry. Yeah, let me just give me a second. I gotta find this thing. So this is the Apex deals. I just wanted to tell you about this. 5K. Yeah, I hear you. I mean, that's just how it goes. That's just how it goes. That's why I'm a huge believer in trading prop, because your downside risk is literally 1/100th of your actual risk. It is, and if you're trading with, even if you're trading with funded, it's still very, very little cost to you. Let me put the link in there again. And Travis, go ahead. Please use our BK code so you can get the discount. But this was like a perfect case use, in my opinion, of prop trading. All right, man. We're coming back down through the 49 markets. The big question. Let's take a look at the charts, especially the S&P, because I think this is the really big one. So to me, where are we on the support here? I think was this 850 was the lowest. Is that where we were? What was on the open? Yeah, we had, this was 820. This is interesting. This is where we go, guys. The 830. This is the, if it prints there, it goes there. This is probably where we go. And once we go there, we see if it will work. I'm gonna trade this, whatever the next green signal is, even if it's a bad one, I'll take it, because again, remember, the idea isn't to find the perfect signal. The idea is that you have the edge on your side. Even if this fails, and even the next one fails, the third one will not only pay for the first two losses, but generally overcome the and generally add to the P&L, because I'm trading 1.5 risk reward ratios. Those are going to be very, very handy when it comes in. No, that's been shelved. A lot of the ideas in BK Bounce have been integrated into BK Scalper. Although, Christopher, I will say this, that when I have time, I'm going to revive Bounce with a lot of the ideas that I have in Scalper in terms of signaling. The great thing about the weakness of Bounce was that it didn't quite know when to find the tops. And I think Scalper will help me. The structures that we use on Scalper will help me pinpoint tops and bottoms a lot better using, integrating into Bounce. So, don't quit on it. Yes. You have the same version, but no dots, just like the old version. I've updated the version, guys. I've uploaded the new version. So that means if you have a version that's not working, delete it. Just simply attach the new version, and you'll have it there. Yeah. Martin, I believe I activated your indicators and I sent you an email. I think you activated. If they were, sometimes people misunderstand. If you're seeing indicators with a green lock, that's good. They're active. That means they're private indicators. That means all you need to do is just simply add those indicators to your chart. Okay, but send me a in our app. Send me a message. I'll double check after the show, but I'm almost certain I sent you up and I sent you an email. Are you on? Are you on a non? Are you not in a dark mode? Maybe you're in light mode, because I haven't tested this in light mode. So I don't know, Fabio. Demo video for the new BFF Scalper wants me to log in, then my account data. I don't know what that means. Oh, Peter. Why would no? You need to. It doesn't require any login. If you're in the community, it's free to watch. Again. Okay, so change to dark mode, Fabio. See if you see them. I can't. I haven't done the light mode issue. Maybe you want to change, or just see if you can change the dots in the parameters to like different dots. I don't know. I really don't know. It's working for everybody else. Send me a screenshot of what you have, and I'll try to fix it. No, this is an update of the BFF one. This just simply has This is a new version. This is a version that has the turn. We're just trading there's three different, it's called range. There's three different functions in the BFF: scalper, trend shift, and range. By the way, I did the same thing for trend shift, guys. If you go into trend shift mode, let me just show you. If you go into trend shift mode, right? So I'm going to go into trend shift mode. Say, okay, what's going on? Why is this not going into trend shift mode? Oh, it's so super slow. Sorry, guys. Like, it's just because everybody is stressing out TradingView. I guess today is not a good day to demo all these things because everything is so super slow. Okay, so if it's in trend shift mode, I'm going to go backwards here, right? And because it hasn't come up yet, right? So here's the cool thing in trend shift mode that I want to show you. You see how it has, like, the buy signals, right? If you go into trend shift mode and you say, here's the trend shift mode, right? Label information mode. You go into detailed. Again, just to give me a second, it takes a while for this thing to process. It will give you the actual entry risk, target 1, target 2 of in the trend shift. So if you're looking for the twice a day turn trades, it will give you the same functionality, which is really, really cool. I hope you guys really enjoy it. But we're going to go back to range right now and see if we can find a trade here. Oh, we got a turn trade. Okay, beautiful. So S&P, again, 2 micros. That's all I'm going to trade. And I'm going to show you what I'm going to do. So basically, I have like a 100-tick stop, 100-tick target as my default settings in my Trade-Evade. That's just to give me breathing space. And then I'm going to manually adjust those based upon what this is pumping out for me. So I got 58 seconds left. We're going to let this thing complete because obviously it's got to hold. The candle needs to hold before we do this. What do you agree with David about? You haven't lost anything, guys. You have the indicator. If you want to scalp for 1 point in a market environment that moves 10 points a second, be my fucking guests. But I'm not interested in losing money. I just showed you a fuck ton of money that I made today doing this because I'm helping you guys. Please don't be idiots and ask me stupid questions. All right, 5 seconds, 4 seconds, 3 seconds, 2 seconds. 2. All right, now we're going to go to the micro MES. I think I want to make sure I'm in the right account. Hang on a second. Trade-Evade. I want to go into the 69 account. Okay, so we're in. Oh God, it's just going to take forever. Sorry, guys. It takes forever to print. Okay, so still printing. I have to watch the thing. So put the sell stop obviously over here because that is the lows. Okay, what I'm watching for is actually like at this point, honestly, God, sorry, this is so slow. All right, so basically what I did is I took half off, approximating where I should have taken my half off. What's going on over here? Why is this thing like taking forever? Oh my God. Fuck. I'm sorry, guys. This thing is so slow in printing. Holy shit. What's TradingView is just stressed out. This is what happens when markets go crazy. So I'm trying to show you how this works with the indicator, but obviously, I'm up on the here. You can watch my account here. I keep pumping, pumping money, but I'm trying to show you where the P&Ls are visually, and they're just taking forever to print. So we will just have to wait. Still not printing. Wow. Well, it's just what it is. This is what it is, guys. We are stuck in. I'm just trying to. Let me see if I can. If I. Did this finally come up? Let's see. Crypto. Power hours. MES. Okay, finally. Oh my God. Okay, so finally this came up. All right, let's look at the chart. So here's where I need to be on my sell. My second sell has got to be over here, and my target 511. Right? Oh, that's a big target. Wow, that's a really big target. My second target's got to be a 511. So wow, that's a really long target for a move. This is a huge move. This was a 57 risk move. So a lot of times what I was going to say to you is I usually don't take such big moves. So you know what? I'm just going to take a little bit of profit. Sometimes you improvise, right? What I was going to say is when the trigger candle, like you see, it'll tell you how much risk is in your trade. Usually on the S&P, if the risk is more than 30 points, I'll sometimes pass on it unless I'm so confident that it's really going to soar higher. I'll pass up on that trade. Because this took forever to show up, and I actually wasn't sure where I was operating. I didn't quite know this was such a big risk, so we took it. I kind of audibled it on the play, but the principle again, the same thing. I give up half on the short target. I give up the other half on a longer target. It works, right? This is 2 micros. We made a couple $100 on 2 micros. I just want to show you how well and how effective this whole thing works. It's got nothing to do with the computer, my friend. I have a very powerful computer. This is the latest Mac 4, probably more powerful than what you have. It's everything is getting slowed up from the server side. It's TradingView that has a million transactions being hit against it, so it can't paint my chart. Okay, all the stuff's getting painted on the server side, not on the PC side. Okay. Anyways. As you can see, trade working really well. The 2 exit structure, P&Ling very nicely. And that is what I wanted to show you. The whole idea is in these high volatility environments, you do 2 things. You go to the smallest possible size. You go to much larger stops and targets because the volatility, you'll make 100 points in 2 minutes, just like you would make 2 points in 2 minutes in a regular day. And using this particular structure, you're just much more resilient to putting money on the board, right? Does that make sense to everybody? Is everybody clear on what I'm trying to tell you? So if you have access to BKBFF, you have access to the strategy. You not only do you have access to the strategy, but you have access now to all of these labels. Which essentially make it super easy for you to trade. It just pre-choose all the targets, spits out exactly where you should be targeting, where you should be stopping, and how you should be doing your trades, right? So again, just kind of repeat it. I try not to do these unless I'm really confident that the risk is good. I try to take risks 30 points or less. That way, if I'm wrong, I'm not going to eat a big loss. But even if I do eat a big loss on a small contracts, it's not horrible. And on the on NASDAQ, which will be over here, which did not have is that? I wonder why NASDAQ did not. Oh no, NASDAQ had a trade here. Oh, that's interesting. This has only had 2 red dots, so that's why the turn here in NASDAQ did not show up. And on NASDAQ, my general thought is like if I get more than 50 points on NASDAQ of risk, I'll pass up on that. Maybe 70 points worth of risk. I'll kind of pass up on that and try to run those. Although, as you can see, like a lot of the stuff, like here, 45 points of risk. This was great. This is 100 points of risk. That's a lot. 55 points of risk. That's fine. You can kind of you can filter by the amount of risk depending on what kind of account you're trading and how much risk you want to take. Because remember, so just to give you an idea, you're trading 2 micros, 100 points of risk, right? That's $400 worth of risk per trade. Okay, that's a lot. It's if you're trading 150 It's not a problem. Even if you're trading 50, it's not horrible, but it is, you do eat a lot, you know? What's the signal to enter the actual label, the label itself? It tells you, you know, the close of the candle, and it tells you how much you're going to risk and where your first target is, where your second target is. It tells you, you know, see, your entry is the close of the candle. It tells you the entry. So whenever we get a label popping up, which is a turn label, that's when you start, you know, focusing on the trade. Oh, sorry. Yes, David, you have to watch the videos on BFF. Absolutely. Before, yes, absolutely. Absolutely. And I say that in the video, you know, this is for advanced. Okay. Yes. You need to choose range. That's right, Fabio. Okay. Watch the videos, guys. Just watch the videos, you know. It's not hard. Everything is in the configuration settings. Just play around with those, and you know you're in good shape. So where are we at? 10 o'clock. So now comes kind of, I think, the moment of truth, right? Rick, I mean, tell me, who doesn't love this? This is like the best of both worlds. Because I'm with you guys. I love to scalp, but it is a little too crack cocaine-y. It was getting that way even before we went, you know, mass volatility. Like doing 40 trades a day, fucking insane, right? Even I was just like, this is too much. I got to get off my own little crack cocaine. They're great. And I think, you know, as I said, scalping for an hour or two, really focused, is a really, really good way of trading. But there's so many people who want to be able to either trade one or two, you know, trades per session, which is what the trend shift thing is designed for, or just trade more languidly. I mean, a turn trade is a 10-minute trade. A 10-minute trade is a very different kind of a trade than a 1-minute trade. It requires it requires less size, offers you more errors because you know you don't have to be perfect on your entry, and lets you manage it in a much more manageable fashion. So when we have volatility, like this type of structure just absolutely shines. And you know, I'm so glad I was able to provide this for you just in time for the massive volatility of the $150,000 account funded in one night, $53,000 account, $50,000 account funded in one night. You know, working on these other ones. And I'm like, you know, a couple $100 from the other wealth charts account. So where's my wealth charts? Over here, right? Totally viable, totally doable, really, really great. Tomorrow I'm going to try and trade wealth charts with you guys, just to see how, just to show you how it trades, and then so you guys can be comfortable as we go into the Wednesday session. Yes. Both choices are good, but I think doing one exclusively kind of really exhausts you. So, you know, even as much of a degenerate as I was, I thought I was just stressing too much scalping on you guys. So adding the range component here and making trend shift an actual strategy, which is what I did. If you want to do, remember, trend shift starts from 10 till 12 noon, right? It looks for those big turn trades, and then it has the second shift, which is the 1 o'clock to 3 o'clock trend shift. Generally, those are really great trades. Those are sort of like, you know, once a day, twice a day type of signals. And now everything is calculated for you. The stops, the targets, the short target, everything. You know, it was just in my head when I was trying to explain it to you. Now everything is calculated. So I think it's just going to be awesome as a structure. It's in the BK trading course, the first video on BFF Scalper. Okay, like right here, guys. If you want to, let me take you to. Excuse me. Let me take you guys to our room. Here's our room. Okay, and if you go into learning and you go into day trading course, What's going on here? Where's the day trading course? Oh, here it is. Oh, I'm in admin mode. I'm sorry, guys. I was like, why is this not working? Because I'm in admin mode. I'm sorry, guys. I can't show it to you, but it's in there. Just simply go in there and you'll see it, okay? I was like, why is this not working? But, that's why it's not working, because I'm in admin mode. All right, we're waiting to see if we get any more signals. Look at this. We had like 1, 2, 3, 4, 5, 6. And by the way, those of you who love to trade momentum, every one of these green dots is a trade, right? Even if you're trading, just think about this. If you're trading micros, right, this is like 30, 40 points per candle. So the way I would trade this, the way you trade it properly is if you have a green, you long here, the stop is the prior candle. So long as it doesn't break the prior candle, you have the continuation on the moves, right? So if you really want to get crazy, you could just trade this 1, 1, 1, 1, at whatever ratios you like. So we did this trade that worked very nicely, and now I'm just kind of waiting to see what else is what other structures is happening. Happy to answer any questions you guys have at this point. If you have any questions for me. All right, look at this. So we're getting possible turn signals, both in S&P and NASDAQ. Now, you guys know I like trading S&P a lot, right? Looks like a baseball scoreboard. Yeah, well, it's the baseball season, right? It's the baseball season. So $1.28 on the clock. And you see, of course, all of this is going to update in real time, but you can see this is basically like a 35-point risk right now as a candle, and now it goes away. So, okay, I'm just watching this at for 7. So, you can see how much essentially whether this is a trade that you'd want to trade or not. 46 seconds on the clock. It's kind of gone away. So that clearly the buy. This was a second dip into that 48.50 level, and the buyers came in. Now the big question is we've basically been bouncing. If you think about this is range just on really huge range levels. Is between 5,020 and 48.50 for the past couple of hours, right? That's the range. That's kind of where everybody's carved out. So let's get ourselves organized. If this thing holds, we're going to sell 2 micros on the S&P. I'm going to see. We're going to manage that trade. We'll see if this trade gives us any kind of a yield here. But that's about a 35-point trade. Sell, right? And now we're going to go to MES over here. And I'm going to go full screen here with you guys just to kind of show you. So where's my buy stops? First of all, we're going to put our buy stops over here, right over here. So that's where they're supposed to be. And our target is 73, 49.73 on the first one, right? So that'll be my first limit. That'll be like around here, somewhere around 73. And my second one is 37. So that's going to be somewhere around here. So, we'll see if this works out. I probably will not. This is going to be like a false, let's go 37, somewhere around there. And again, like I said, the dashboard is just suggestive. You don't have to be precise. It's, you can be precise if you're very anal. I just get it. As long as I'm in a neighborhood, then the trade should execute pretty much close to the parameters that I want, right? So what did this thing do? It automatically understood that this was the swing high. You see how this was a swing high, guys? In terms of on the charts, this was the candle that was the swing high. So therefore, any move above that is going to completely invalidate this turn trade, right? It calculates what the total risk is. It tells me half risk, where to put the half risk to kind of mitigate, to take some money off the table and mitigate any of the risk situation. And then, try to milk the second trade. Very, very simple structure. Probably not going to work this time, but as I said to you, it only needs to work like 1 out of 3 times to be incredibly profitable. So this time, I think we're gonna probably. It looks like we have a strong move to the upside, and probably the next green trade is going to be the trade that's going to pay us out. You do have to get mentally used to the idea of like, oh, I'm only going to really win big 1 out of 3 times. But because you're trading micros, because the control, your losses here are very much under control. It's totally doable. It's no, you're swinging between $500 and $600 up and down, which is not a lot on a $50,000 account. I tell you the other thing that what totally surprised my attention. I saw this from wealth charts, and it was really, I realized like why so many people have a hard time passing the prop, and I realized the little trick that all the prop firms do. I'll explain to you just 1 second. Let's just see if this trade does anything for me. It looks like it's going to stop me out. We'll have to be patient for the next one to come in. But what I realized is I had one account at wealth charts that I had, like I said, I think this looks like it's a bottom. I'm going to hold the trade, right? And it was a single contract, but it was like for 100 points up, 100 points down. Now you would think, oh, okay, so long as I'm within my ranges, I'm okay. But you're not, because the way they do the trailing, the trailing stop. If let's say you went 75 points in the money and then retraced just 25 points behind you, because they moved the stop dynamically against you, you got stopped out. Like my original budget is $2,500, right? But because of this staircase method of like dynamically moving the stop, I effectively got stopped. I lost the account at about $1,200, right? Because it kept moving up. I didn't take the profits; it kept moving up. Now we've never had that problem because scalping, by its very definition, completely doesn't get affected by this strategy. That's why so many guys who scalp with me are so effective at getting funded, because we completely avoid the whole retrace issue. But if you're trading anything on a swing-like basis, like big moves, that retrace issue really comes into play, which is why this whole intermediate step where, you're retracing, but not nowhere near, like, your retrace is a couple of $100 instead of $1,300, $1,400. Even as the stop moves up, you're really not in any danger of getting clipped. So that's what makes it so interesting as a structure. And it also made me realize why so many people who trade really long-term positions can never get funded, because they're getting stopped out by the trailing stop. Ambulance, police, or fire, guys. So it looks like killed me, or both is about a third, and a third. So not bad. It's pretty much it's pretty good that a third of you guys actually did well. It's great. Fire truck. No, I think that was an ambulance, my friend. The fire truck would be a little bit more, obnoxious. Ambulance has got a little bit more of a shriek. So we're having a hard time pushing through. Looks like short covering rallies that then get sold. And on the macro side, if you guys kind of want to understand what's going on, this is why I think it's, of course, everything changes in a second here. And Trump could come out and say, "Hey, everybody's is doing deals with us. We're going to lift all these tariffs." The moment he says that, that's gonna soar, and I'm going to get long on everything. It looks like that's it. It tested us, and now we're getting really, really strong to the upside. Okay, we're stopped out on these moves. That's fine. We'll reconfigure myself for the next trade. This trade did not work because the turn here was soft. That means they really, really are buying stuff now. Really, really buying it strong. So, wow. Is there news on the thing? Zero Hedge says just big orders on the bid ask. They just move it. Wow. Holy cow. Really big move. Big moves, guys. Look at where's NASDAQ. Man. That's interesting. Should we do one trade for shits and giggles? This is a really, really massive trade. But since this is the account that I abuse all the time, maybe we'll do that. I kind of want to do it. Let's do buy. This is just massive. But put the two stops over here. Put this. Oh, let me get out of the way. Let me see if I can make one short target. I'm just basically trying to do my short target, long target strategy. Let's see if it. Wait, why is it going down? Was it? I'm at 516. Oh, am I on? What's going on over here? I'm on the MESs. Yeah. Okay, so we sold out. I guess the prices are so set. So let's just give ourselves this one over here. Let's see if we can move this. The second one will kind of. I'm cheating a little bit here. I'm not giving myself the full P&L, but these are just massive candles. Let's see if we can just extend this a little bit more. What's going on here? Why is this like negative? Oh man. You see how this is like lagging? I literally can't see which, what the prices are like literally all over the place. 518. And now this one runs right through it. Wow. This is so fast. Okay. Let's kill this. Okay, good. So, we recovered back up to 51,000, but you guys, you get the idea. Short trade. Wow, we're really, really picking up steam. I knew this was a clean buy because just the momentum here was really, really good. But you get the idea of like how you trade with half target, full target. I am of course unable to hold the second target in this kind of massive vol, but I'll take it. I'll take the I'll take the trade. Anybody follow me on that trade? Yeah, I'm looking for news, but it looks like let me see if Zero Hedge is simply saying buyers on the bid. Hassett, Trump is considering a 90-day pause in tariffs for all countries except China. Oh, that's why he's who the fuck did not? I knew it took exactly 5 minutes for him to cave. And that is why we're just this is what's going on, guys. This is what's going on. Yeah, this is a massive short covering rally. But don't be fooled. I don't think this is all la-di-da for the market. The market is obviously very, very positive on this. It's going to act well, but people are just going to be exhausted with the fucking tariff tariff poker here for a while. So I'm going to be a little bit cautious about chasing a lot of these big moves. I think we're going to probably consolidate, and people, the safest place people are going to be is on the sidelines for quite a lot of time. maybe this was a brilliant move on his part. Everybody decided to come back and negotiate. So if he's going to give 90-day pauses to everybody, first of all, the most important part is everybody on the U.S. side who's got stuff on the dock can buy the stuff without tariffs right now, right? So they, at least for the 90 days, they can do business without any additional cost, because somebody called them and just said, you're being a fucking idiot. And then he can go back to all these other countries, get everybody go to zero. If that's the case, it's actually very, very positive for world trade and positive for the markets. But, it's putting all of us through lots of trauma here. But yeah, that is what's going on here. So, we followed the money and we made the money back, which is how we traded. Another mutant finds all of this very, very amusing. But this is markets, guys, and especially markets under the Trump regime. You basically have to, you're playing poker all day long, and somebody is bluffing and somebody isn't. Anyways, great session, right? I had a fun session today. You guys saw the term trades in action. This is going to be I think the future for us for the next week or so until we get to 0.5% days. If we're at 2% days, there's no fucking way we're scalping. The spreads are bigger than our stops at this point, right? The ladder is like, what I mean by that is things move. Like I'm watching the spreads right now. They're moving 5 points a second. So the bid ask is like 5 points wide. So, everybody now is running to short cover because there's a relief rally. We're probably going to go to 5,400 before it even finds a pause. And look at this massive move to the upside. Yeah. That's why I was buying yesterday. I was buying on the open after the first 20 minutes. I was pretty much on the bid. That's definitely helped me. But that's, if you ask me why was I doing it yesterday, it's just I remembered all my old habits from like the 90s when I used to work for a market maker called Herzog, Hein and Geduld, and nothing ever changes. I remember that whenever somebody would panic, and it would just be complete relentless panic, the old guys on the desk would just come in there and just buy the stock. And the next morning, everybody would come back for the stock, and they would just simply give it up $4 or $5 higher. They wouldn't even give it up sometimes. They'd go, no interest, and they force people to really short squeeze themselves higher. It's exactly what's happened here. There's a lot of people who sold short over here on a macro thesis, and now they're like 3% down. They're getting squeezed up the wazoo, and it's going down. But it's a sugar high. That's what I'm saying. Don't believe this is going to last. So just be careful. All right, was that fun? You guys enjoying the new addition to the repertoire using the turn trades? Remember, there's also going to be trend shift trades coming up between 10 and 2. Matter of fact, we can go into trend shift mode here just to see how it's setting up. We have to go into over here into BK trend shift mode, and I think they're all. It just takes a second for us to shift this. Why is it not painting? What's going on over here? Oh, hold on. I think I'm. Hang on a second. I'm sorry. Let me try this. Let me try this one. Oh, I don't know why it's not painting. Oh, is it because? Hold on. Oh, offset 1. Right? No, what's going on over here? Oh, there it is. Finally, yeah. Jeez, sorry. It just takes forever because everything is so slow. But this is the 10 o'clock hour. It's going to start painting the charts and start looking for shift reversal signals, and those are going to be interesting as well. And you can get stock targets and stops for all of those things as well. Okay. Great. Thank you, Cheryl. I'm glad you really liked that. I'm glad everybody really liked that. Thank you so much. Okay, Martin, I'll take a look, and I'll be back to you after the show is over, okay? Everybody have a great day. Enjoy. I'll see you guys tomorrow. Take care, guys. Bye-bye.